Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting and moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment the market is testing and rejecting to the upside a quite strong historical support and demand area. In fact, from here, all these previous rejections to the downside were created, confirming this zone as a quite strong supply and resistance area that this market continuously respected as resistance. But then the market, with this impulse to the upside, broke above that resistance. So all that previous resistance was turned support here. The market went and tested that previous resistance turned support and rejected it to the upside quite aggressively, as you would naturally expect in a situation like this. We can also notice that when it comes to the overall pattern, this is simply a textbook uptrend, with the market starting to create here higher highs and higher lows. Now, since the last movement was the creation of this move to the upside, so the creation of a new higher high, so higher than the previous high here, and we already have the creation of a higher low, because this low here is higher than the previous one here, the next logical step would be to see a correction, the market to create a new higher low, and then a new higher high. That would be the logical continuation for an ideal uptrend in a situation like this. So from a monthly standpoint, everything seems quite bullish, but the market seems to get ready now for a correction before the continuation to the upside. So at the moment, in the long run, everything still seems quite bullish, but in the short term, things are starting to get a bit bearish, so there is the possibility for a short-term bearish correction and then the continuation to the upside simply for the creation of this higher low. Dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, the situation is quite clear. We have a market which at the moment is starting to move in this weekly range. We have the top of the range here, and we have the bottom of the range here. Now, obviously, the top of the range is acting as resistance, and the bottom of the range is acting as support. And at the moment, the market has just tested the previous support, already started rejecting it to the upside. So in a situation like this, there is definitely the possibility to see a bit more bullish price action being created away from this area. So the weekly time frame does seem quite bullish. At the same time, we can also notice how we do have an impulse and a correction. And after an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg, and we can see how the 50% retracement is lining up perfectly with the previous low, therefore the low of the range, and this creates confluence of support because we have multiple layers of support lining up in the same area of price. And when you have a confluence of support zone, you usually expect to see institutional longing, but we will be speaking about that later on into the video. For now, let's drop down on the daily time frame and see what we have. Well, from a daily perspective, at the moment, the range is quite well defined, the range that we have previously identified on the weekly time frame. And we have to remember one thing. When we are inside of a range, there are two patterns which tend to be quite accurate and tend to be completed with a high probability, which are W and M formations. Now, in this case, what we can notice is that if from here the market will continue higher, essentially we would have the creation of this W formation. And after the creation of a W, what you would expect is a potential rejection to the downside for the completion of the pattern at the neckline, which is the previous resistance turned support from a daily standpoint. So here on the daily, there is definitely the possibility to see this W formation being created and then completed at the neckline. That is definitely a possibility, especially if we are inside of a range from a weekly standpoint. For now, let's go and see what we have when it comes to the commitment of traders to the COT data, so essentially what hedge funds and the big players in the market are doing, and let's check the data precisely for gold. Now, what we can see here is that in the long run for gold, net positions have been increasing very aggressively. We went from having 131.1k net positions all the way up to having 233.9k net positions. So in the long run, institutions have been moving back to the bullish side for gold, therefore making it stronger, increasing their longs and decreasing their shorts, which are now sitting at 42k, one of the lowest levels that we had so far. So institutions in the long run are moving to the bullish side, and we have seen that on the monthly time frame at the beginning of the video, with the market being in that strong uptrend from a monthly standpoint. However, in the short term, we are seeing a decrease of the net positions from 237.3k down to 233k. In fact, in the short term, institutions are starting to move slightly to the bearish side, which in this case agrees perfectly with what we have seen on the monthly time frame, because if you remember, on the monthly, we have seen that we expect short-term bearish price action for the creation of the higher low, and then a longer-term bullish continuation. And that seems to be reflected perfectly in the positioning of institutions, which are long-term bullish, but short-term bearish. So as institutions are slightly decreasing their net positions in the short term, there is the possibility for the creation of the completion of that W formation that we have just identified on the daily time frame. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. Well, here in the daily time frame, if the market from here will create a rejection to the upside, that would, as we were saying, create this W formation. And after the creation of a W, there is definitely the possibility for a potential reversal lower for the completion of the W formation at the neckline. That is definitely a possibility, especially as net positions in the short term are starting to decrease, and on the monthly we would expect that correction. So if the market creates this W, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to a bearish market, at that point, I wouldn't be surprised to see a potential rejection to the downside, completing this W formation at the neckline. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.